So it is November 11th, 2022. And I want to start off. I have a picture of the news this week. So Tuesday, again, this is my time, so please make sure you're checking this with your local time. This is my New York local time. But 7:30, we have CPI, which is amazing. I love that news. Wednesday, PPI numbers. And then Thursday, we have core retail sales. And then Friday, we also have consumer sentiment. So all of those are amazing for me. I used to think a lot about news is not very. I didn't want to participate, but the more, especially with this model this year, ICT's opened up my eyes to exactly backtesting because I've backtested this and watched it, play out in person. News sets up these models so perfectly. It's crazy. Like right at the news drop, you will see the model form or it will unfold right after it. So I utilize these a lot. So tomorrow I probably won't trade because there's no news event. It's not meaning I won't take a trade. Not saying there won't be a setup, but it's less likely, right? So we want to always be targeting days where there's news drivers, especially ones that have not necessarily. I don't like FOMC and I don't like NFP. Those are the two I kind of stay on the sidelines. Some people like both of them. I'd rather just stay out. It's 2 days out of the month that I can just kind of relax personally. So without further ado, let's jump into. I'll go over some other pairs. If you guys want to drop in the chat what you're trading besides, maybe just indexes and futures, maybe you want to look at some Forex. I spent 4 years trading Forex, so I know those markets very, very well. I have just recently switched over to indices and futures this year just because of the price action. It's a lot more clean. The model forms so beautifully on these compared to Forex right now, but it's not saying Forex or anything like that. You said, yeah, you mainly trade EU. So same with me, man. I mean, I traded EU for 4 years. Um, I just recently, man, I really can't get with it. It just doesn't really look clean to me. There's nothing in here that personally, if you look at this entire year, look at the price action compared to indices and futures. I mean, it's all the same. People get scared, and I was scared of, like, oh, I don't want to trade futures or stuff like that because I thought I moved more. But I mean, look at how choppy this is. There is some decent moves, but besides that, you're staying range bound, just chopping. I mean, look at this. This is miserable to me personally. I'm not saying you have to trade my style, but if you go over to, indexes and futures, I mean, the swings are beautiful. Everything's moving beautifully. So let me see the chat. Yeah, you see that. So I mean, I'm not hating on it, man. I love Forex. It's my first love. So I definitely will get back to it once I see some clear price action. And I mean, indices, the money moves between markets. So eventually indices is going to be stale. Yeah, you go for scalps. I mean, my personal model, I go for 3R. So let's jump all the way out to a monthly. So you guys are going to watch me live mark up my charts and you're going to see how I do it because I like to keep things really neat and organized, and maybe you can, take something out of this. So I always, no matter what, on a Sunday, I clear my charts. I clear them. I get rid of my old biases, anything on there, and then I like to start fresh on a monthly time frame. So for me, I like to keep things organized. You'll see I always have this vertical line because it keeps it really nice and organized for me personally. So starting on the monthly, some monthly time frames have a lot of information. For me right now, there's not too much to utilize. What I'm looking at here is sell side resting underneath this low. So I'm going to go ahead and annotate that, right? So we have sell side liquidity resting here, and we have buy side resting here. Okay, so we have our buy side and sell side. I mean, there's buy side here, buy side. The next thing I would annotate, because I probably have done this on the monthly chart numerous times already, there's a fair value gap resting here. So that's a draw on liquidity. Personally, it's just I'm so OCD with my charts. I don't want it there, but I know in the back of my mind it's there. In a monthly time frame, none of this is going to move within a couple months, so I'll be able to go back to it. So next thing I do, I jump down to a weekly. I do the exact same thing. I take a vertical line. I make sure it's only visible on the weekly, and I start marking up my PD rays and marking up the sell side and buy side liquidity. So first thing is this low here. I'm going to mark up. Doesn't have to go in any order, but I'm just describing what I do. So sell side's resting there.
Right.
We have the sell side liquidity
Why are you
resting
just
under.
looking like that?
If you can mute your mic, that'd be great. Appreciate it. Who's talking here? All right, sorry, I just muted everybody. What I look for on the weekly time frame, especially when starting a new week, I always, depending, this week's a little bit, the opening was weird, but let's say for instance, we were resting at this. I'm just going to replay it real quick. Let's say we were starting here. I'm always looking at the previous week low and the previous week high. And then I'm looking at the previous week's highs and lows. And I'm gauging whether or not do I believe price is more likely to drive up into the previous week high or low. That's the easiest way to get profits. Like this is what ICT's taught. He always tells us to look at the previous week high and low and whether or not do you believe that price is going to draw towards that high or that low. And once that's achieved, if you can find your model before it takes out the previous high or low, that's all you need. So looking at this week, I touched on Friday or Saturday yesterday. I touched on this fair value gap resting here, and then this is the fair value gap here. Something else I wanted to note is this bearish order block. So this is our bearish weekly order block. That's something to note. I'm not going to annotate it on here, but I do have it in the back of my mind. I was saying to pay attention to this redelivered rebalanced right here. So shoot right across. If the bodies can stay underneath that, absolutely beautiful. That's exactly what I'm looking for. So notice how I'm looking at the PD arrays all the way from a weekly all the way down, and I'll show you. So on the weekly here, we have this fair value gap resting. I'm going to note the buy side just in case for, nothing certain. We could punch up into the buy side. Not saying we will, but it's something I do like to annotate just in case anything happens. So that's all I do. I don't need to mark up all these different things. I just mark up my sell side, my buy side, and I look at the PD rays that we're trading into. If you take a fib from the swing high down to the swing low here on a weekly chart, if we can get up above the equilibrium here, so maybe the 50% of that fair value gap here on the weekly, that's exactly what I'd be looking for. Okay, going down to a daily, I do the exact same thing. Vertical line, and I start marking up the sell side and the buy side. So we have the previous week low resting here. So overall this week, I'm going to be looking for the sell side to be taken. I don't know if we're going to get down there by the end of the week, but we'll see what happens. So 3881.4 is a target for me because I am bearish overall on this pair here. So sell side liquidity is resting here. Make sure that only visible on a daily. And then I'm going to be looking at this fair value gap here. Now, for me, I'm just looking at this. I'm actually going to make this annotated like this, just because that's my personal liking. So I'm going to put minus OB, which means minus order block. Where the hell did that just go? So you notice how I marked up these two up close candles here, because most people, especially when they first start learning ICT, is they only mark up the last up close candle. Both of these last up close candles are your bearish order block. Okay, so if you moved out to like maybe a 3 or maybe probably a 2-day, which not saying to use that, but this would be one consecutive candle. Okay, so look for the discount low of this to be traded into. You have the fair value gap resting here inside of it. That's what makes a true order block, is a fair value gap before the order block, not just one down close candle. It's not always like that, but for the most part, if you want a high probability order block, you want a fair value gap before the order block. So the fair value gap is before the order block. Okay, so I want to see price potentially move into the discount low of this. Let me put this on here. And I mentioned as well, the reasoning why I want to start looking for shorts there is because we're inside of a premium, right? We're above equilibrium here. So now we're inside of a premium. So I'm looking for us to trade into that order block and then for us to go short. And notice how these PD arrays are also residing inside of the weekly time frame fair value gap. So that makes it an extremely strong area of interest for me. Okay, so I can mark up just for you guys' sake. We have a market structure shift underneath here. Okay, so we have a market structure shift underneath there, and I'll start marking up lower, even lower sell side liquidity. Okay, so another thing to annotate on here is the order block still. And honestly, I don't think this is going to give much resistance or support once we reach into that, to be honest with you. I think it's already done its job personally. But I'm still going to annotate it just because we haven't dug into the opening of that order block just yet. So that's something I want to make sure. So we have the sell side resting there. We have the order block here, sell side here. There's going to be more sell side underneath the previous day low here, and then eventually the sell side resting here. But for right now, I'm going to be paying attention to this here. Okay, so this is my area of interest. What would make this invalid to me is if we close above this high, and then my bearish bias is invalid if that's the case. If that is the case, then obviously we start looking for buy side liquidity, start being rated, and then we just kind of switch gears. Okay, so I always keep the other side open, but I'm always at least trying to lean towards my own bias, but I am open-minded to, anything, right? So does that make sense so far, everybody? I don't want to, go too fast for anybody, but I just want to make sure that everything is going smooth. So let's jump down to a 4-hour time frame. Cool. All right, so now looking at my vertical line, I want to make sure that we are going to get to the end of the week here, so maybe the 15th. And I'm only going to make this vertical line visible on the 4-hour. So what do? Start marking up the sell side. Okay. So sell side liquidity is going to be resting here. This is the previous week low. We have the buy side that was rated here. Buy side was rated here. And then we're looking at this fair value gap here, which I may actually, I'll keep the vertical line. I'll actually change this to red. So looking at this, right? This 4-hour fair value gap is inside the daily fair value gap plus the order block plus the weekly fair value gap. Do you see how you start from a higher time frame and you start narrowing down the PD array and the liquidity, and you start like a magnifying glass trying to narrow it down to a specific point that you can start looking for your model to form in. So right now, there's nothing here for me, right? I'm going to wait for the weekly or for the opening gap to maybe get closed in to start looking at bullish PD arrays to send it into the bearish fair value gap. I'm looking at probably, and this is just a guess, I'm not going to really use this too much, but this fair value gap is the only thing that I see that we could use to send price higher. Everything else is balanced, right? No fair value gaps, no fair value gaps. This has already been utilized. There's no reason to come all the way back down into that fair value gap. We're already in our buy program. So for me, price would make the most sense to dig into this fair value gap to send it into this bearish fair value gap. Okay, so that's what I'm going to be looking for. The buy side is here, like I said, just in case the other side of the narrative plays out. At least we have that annotated. Okay, so what I'm going to be looking for is probably the equilibrium of this fair value gap to be hit. And honestly, I don't even know if we're going to dig into that, maybe about 25%. I'd rather see this thing be left open and we start digging above the equilibrium of this fair value gap. That might concern me, to be honest. If we dig into like 75% of that, we might target the buy side. But for now, everything seems good to me here. I'll do the rest when I hop off with some of the buy side. So looking at the 1 hour, now I take the 1 hour vertical line and I go to the end of the day tomorrow. So for me, that's 1800. And that way I can, and I just move it every single day. And that way I can just have everything neat and organized. So looking at the 1 hour, there's a small fair value gap here. And then you have the larger fair value gap resting here. Okay, so everything here, I'm going to take it down to a 1 hour, and I can make it visible on all lower time frames. Okay, so this fair value gap, narrowing it down all the way from a weekly is really what I'm going to be looking for. I actually would really like this to be tagged. I would like just a quick spike into it, and then we can see lower prices. This fair value gap is not super significant to me. It's something to pay attention to, because I believe the 4 hours somewhere in this region. But for now, this is really what I would like to see drawn into. Looking at lower time frames, we had the sell side liquidity taken out here, which is the reason why we ran higher last week. It's not really super significant to note, but I'll put it on there. Next is to note the liquidity. So the sell side liquidity is resting here. And then I'll go ahead and just copy that. So sell side is going to be resting underneath below here. And then I'll start looking for some maybe bullish PD arrays to look into, but there really isn't much to annotate. Price is already basically balanced all the way through. We dug into this fair value gap here. So like I said, I would like to just see the opening gap be filled in and then price just run higher into the fair value gap there. So there isn't much to note on the 1 hour. Hey, you're welcome, Dan. I'll see you tomorrow. Good luck and good trading, my friend. Looking at everything else, the buy side was rated here. Buy side was resting here. And if you guys notice, I don't really like using market structure breaks too much. I really just like looking at liquidity and PD arrays, because that gives me the cleanest entry, not entry, just I would say vision. Because if I start skewing it with a lot of market structure breaks and shifts, and I just like looking at liquidity and seeing where price is trying to draw into and draw towards. That's the easiest way for me. Market structure shifts are very subjective. They're very much somebody can look at a chart and 100 different people could look at a chart and say, it's an uptrend, downtrend. So that's the reason why I don't really do too much market structure shifts unless it's on lower time frames. So the buy stops have been ran here. So buy side has been rated. On a higher time frame, this is the YouTube model, right? We're running out buy side. We're looking for PD arrays to be drawn into, and then we're going to look for that model, right? So you look for price to draw into an area of interest. You see the displacement lower, and then we wait for the retracement into a fair value gap inside of a premium or discount. And then you start looking for the shorts, and then you can find your shorts along the way here, all the way down into the sell side. Okay, so the sell side is what I'm targeting this week. I want these areas of interest to be met. I wouldn't be surprised if we have a consolidation day, just the way prices moved. I wouldn't be surprised if we have a pretty range-bound choppy day, just looking at price, but who knows. So looking at the 30-minute, I'll keep the 1 hour fair value gap annotated. Both of those are okay to me. Looking at a 15-minute, same thing. I don't really look too much, especially because the 4 hour already did it justice. So I will probably, oh geez, I will take this off of the 15-minute, just so it's a little bit more clear for me personally. Okay, so looking at lower time frames, again, I wish there's a little bit more information here. But what I could start doing on a 15-minute is marking up all of this sell side. Actually, I'll just leave it here. That way, on a lower time frame, as soon as we start moving lower, I can start looking at the sell side liquidity that we could target. So underneath this low, underneath this low, eventually you'll get to a point where you don't even mark up charts. It's just you look at the charts and you just know. I know ICT doesn't even mark up charts, which makes sense. Sometimes it gets a little bit too clustered for my liking. As far as that, I think that's really it from the US 500 markup. There isn't too much else I would like to mark up. I already know my bias. I already know what I'm leaning towards this week. I already know what day and what session I'm looking towards, which is Tuesday. I think Tuesday could set the high of the week. Tuesdays usually have a 70% chance of setting the high or the low of the week, depending on the weekly profile. So that's what I'm looking for. So Tuesday, I would really like to see a punch up into here. I wouldn't be surprised, and I guarantee I predict this. Not an ego, but I guarantee you tomorrow we have a down close day. Very very range bound, nothing too exciting. And what that will leave, which is what I'm hoping for, is it leaves a daily low here, and then there's a fair value gap from this low from today's low. And then Tuesday we dig into that and send it into the order block. That's what I'm hoping for. So I'm always in my mind trying to forecast what the daily or the weekly candles can print. That way it just helps my mind. So that's it for US 500. Does anybody want to see anything else marked up? What are you guys trading? I can go over to Forex here. Let's look at the dollar, because the dollar will definitely help us navigate. I honestly haven't looked at the dollar index in a while here. So on a monthly, looks like we've drawn up into the reclaimed fair value gap here. I trade S&P, but I assume it's the same US 30. Yeah, you know what I can actually do while we're sitting here? I can bring this over. So this is my SMT chart. I usually don't bring this out, but I have a monitor to my right and a monitor to my left and the main monitor. I always have on my right monitor this SMT chart up. Looking at SMT wise, I would like to see US 30 not make that higher high here. So above this high, do you see how US 100s popped above it? US 500s popped above it. US 30 is not yet. So what that means to me is US 30 is probably the weakest out of them. Okay, so looking at the lows here, there isn't super significant, but if you see here, the reasoning why we were super bullish as well, this low here, US 30 went underneath it, US 100 did not, and US 500 did not. So that is a bullish SMT. Just so you guys could understand that. I'll look over US 30 just for the fun of it after this. So looking at the dollar index is super useful to use for indices or futures. It's usually opposite of what they're doing. So dollar's been pushing higher, bullish, and indices have been going lower, right? So we've fully closed in this fair value gap. Honestly, I wouldn't be surprised if we draw up into this fair value gap on the monthly here, potentially the buy side here. Going down to a weekly on the dollar. Looks like to me, we could draw into this fair value gap here. And then the order block resting here. I really wouldn't want to see basically the opening here. I wouldn't want to see that traded past maybe 25% of that, but really I just want to see the fair value gap get filled. Just a quick spike into it and then leave it. Okay, I don't think this is bearish by any means. I'm pretty bullish on the dollar, to be honest with you. And then we'd be targeting the buy side liquidity resting here, which is the previous week high. So like I was talking about on a weekly time frame, we're looking at the previous week high and the previous week low. So this is going to kind of help you simplify your trading in a sense. So do we think that it can draw down into what is more probable of happening? The previous week low to be ran out or the previous week high? Personally looking at it, I think the previous week low is the closest and the easiest to be taken out first. So if I was you, or if I was trading the dollar or EU, I'd be looking for this opening gap, so the volume imbalance to be filled in, and then for us to run out the sell side here, and then come into the fair value gap. That's what makes the most sense to me. It doesn't make much sense to me to go higher and run out the buy stops resting above the previous week high, right? That doesn't really make much sense. Okay, so looking at the daily, right? So it simplifies things, especially if you have a large, like, let's say this previous week low is like resting here. That's a pretty big range, and it helps you simplify your trading. Be like, okay, I'm just going to target the previous week low, and if you can find your model before you run the previous week low out, then you're done for the week, and it makes things so much more simple. So looking at the daily, we ran out the buy side liquidity resting here. Okay, we pumped up above it, and then we had our displacement lower. So even on a daily time frame, looking at ICT's YouTube model from this year, it's on a daily time frame. So we displaced higher, and then we had the shift in market structure lower. Oh, we almost have 10 minutes left. Geez. So we'd be looking for some type of fair value gap. If you look on a 4-hour, knowing that daily time frame, we ran out the buy side, we displaced lower. So that's a really nice displacement. Even though we ran out the buy side, this was on the daily, there was never really a good displacement lower. Okay, here it's okay. This was really sloppy, and then we had this really nice displacement with the fair value gap resting here. And I believe if you go down to 1 hour, this is your order block here. So all of these consecutive up close candles are your bearish order block, coupled with the fair value gap, coupled with being in a premium. And that's the reason why the dollar sold off, right? We pumped above an equilibrium and then dumped. So looking at that 4-hour, look at the fair value gap resting here, the order block, and then pay attention to the bodies of the candles. They closed inside of the fair value gap right at equilibrium. Okay, so the wicks are not as much a concern to me. It's all about the bodies and the closures. If the bodies and the closures close inside of it, it's telling you a story. Okay, it's telling you that you're more than likely still bearish. That was just for price to dip into a higher premium into the order block. And then you target the sell side here and here. Looking at this week, I would like that opening gap is a little weird to me. I know dollar does that a lot. I really wouldn't like price to get even that high, but I'm just trying to mark out the fair value gap here. We kind of dug into it a little bit here. It would be really nice to see the dollar fill in that opening gap from this opening here. So something like this would be nice if you look at the order block here. So this is your bearish order block. And then if you do from swing high to swing low, something like this. That's what I would be looking for personally if I was trading the dollar. I would be looking for lower prices. And then look at all the sell side here. Okay, all these relative equal lows. That's your draw on liquidity. That is your narrative. Always look for liquidity. Always look for your narrative first. Okay, so you're looking for bearish prices. You're looking for PD arrays to be in a side of a premium, and then you're looking for the draw to be met. And then the daily low here, I'm guessing, or weekly low is another draw on liquidity. And then you have this fair value gap here, which is another draw on liquidity, which is inside, I guarantee you, of that weekly fair value gap. Remember? So that's how you build a narrative. That's how you build a bias, and you start to understand, okay, where's price going? Why is it moving there? Okay, we had the shift in market structure here. So we had the shift underneath the previous low here, displacement, premium to discount. Simple. That's what I'm looking for if I was trading the dollar index. With EU, we ran out the buy side here. We dug into this fair value gap here. If I am bearish on the dollar, then I am bullish on EU. So I'd be looking for this to be closed in and then for us to potentially run higher. But don't take my words super concrete for Forex. I don't really trust it. I don't really like it. I believe there's some type of SMT going on with them, if I'm not mistaken. It looks like EU made a higher high than really the dollar made the lower low. GU, this fair value gap here on the weekly, daily. Yeah, Forex just doesn't really interest me. It's just super sloppy, man. I don't see the fun in it. I wish it was, man. I really enjoy Forex, or I did at least. Yeah, looking at the daily time frame for EU, we're digging into the fair value gap here. Could it send price lower? Yeah, but look at, we took out sell stops resting here. So we took those out, took out sell stops here. Anytime you want to be in a bullish environment, you want to see sell stops taken out before going higher. The only way we'd be super bullish is if we close above the fair value gap. Once we close above this fair value gap, I don't even mind this fair value gap. We're going to probably go straight for the buy side here. But I am super bullish on the dollar. So, I mean, we could see a more consolidation, more weird movement out of Forex, and then potentially see lower prices. But that's all I have for you guys today. I appreciate you guys being in here and watching it. Yeah, that's all I have. I'll go ahead and post the recording in case any of you guys want to rewatch it. Besides that, I'm gonna go ahead and end it. Appreciate you guys.